What I see is a battle royale, and not just between Trump and Powell, but the markets and the Fed, because the Fed wants to, globally too, the central banks want to lower interest rates because they want to inspire more inflation, right? Because we've got this massive wall of debt, whether it's government or corporate or even individual debt, and we're seeing, the defaults rise pretty significantly. So this is a very dangerous time. I mean, it's extremely dangerous whether you're in the market or you're wondering what to do. And I'm going to tell you, you got to get to safety. And safety is sound money, physical silver, physical gold. And they have different functions. And that's also food, water, energy security, barterability, wealth preservation, community, and shelter. And since the last time we spoke, I had just started on my community journey with you, right? And we talked about what happened in Australia, where I just threw the materials out and started talking about community. And since then, I've really worked hard. I've traveled quite a bit to develop that global community and a sound money movement, because we've got a new currency that's coming in. And if they have their druthers, it will be a surveillance currency. So we need to come together on a global basis and take that out of the crappy debt-based fiat money that they're inflating away and put it into sound money that is above all governments and above all central banks, because both of these are used in every single sector of the global economy. There's 8.4 billion people on this planet. And so people sit there and say, well, what can I do? I'm just one person. And that's true. And I can easily say that too. I'm just one person. What can I do? But coming together, there's so much more of us than there are of the governments. We need to take our power back, and we need to have a say in the new currency. This is our opportunity, really. I think we're going to have an extraordinarily interesting 4 years. I think everybody is for a smaller government. I'm not quite sure that they can do it without massive disruption. And that's really what I expect to see. And that disruption should cause an awful lot of volatility in the markets. So, which is great for traders. That's what they like, is that volatility. That's what I expect to see. A lot more inflation, but a lot of volatility as this whole piece transitions, because there's so many unknowns. And as you said, he's made a lot of promises. Well, it's not just up to him. So we'll see what happens. I don't think that they are mutually exclusive. So whether or not he inserts the tariffs at this point, anybody that was coming in had a big spending agenda. And that means a whole lot more debt. And when you're looking at the challenge that the central bank is having with interest rates, right, and having to keep them higher for longer, and the government needing to issue a ton of more debt, plus all the corporate debt that is rolling over or needs to roll over because they can't pay it off in this higher interest rate environment. I don't think it's just tariffs that are going to create more inflation. And I think this inflation has proved a whole lot stickier because of all the money that they printed, right? I mean, that money is still sloshing around in the system. And I think, interestingly enough, at the same time that there's all of this money that they printed really since 2008 and then 2020 sloshing around in the system, there still seems to be a lack of liquidity. So the ability to buy and sell something without majorly moving the prices. So we could not be living in more interesting times. We just couldn't. And I'm never really worried about whether or not the U.S. can pay its debts, because they could just create more debt to pay the old debt. The problem is, when we're going back to geopolitics, that debt on a global basis is starting to matter more. What's good about the US dollar is that the Federal Reserve on the Fed, they post the purchasing power of the US dollar because it is still technically world reserve currency. But I see something that is happening today, and actually it started in 2008, but if I look on the graph in 2012, we saw a run on the dollar begin. And I say that because both Japan and China, key buyers of our debt, have been selling the debt and not buying more. And that is very similar to the run that we had on the dollar back in the 60s, when foreign governments were sending in their dollars and pulling the gold out of our system. So when you have a run on a currency, and this happens to be world reserve currency, that's not really true anymore. And it hasn't been for a while. But that is a huge shift. And what it tells us is that in the US, while globally everybody's going to go, into a hyperinflationary depression, the US is going to feel that the most because there's just no buyers. And all of this debt that needs to be issued to fund what we've already spent, let alone what they're wanting to spend, and the shift that's coming in. I'm glad I have gold and silver. For silver, what I'm seeing is the coming to conclusion on that cup formation. Now, you have to understand that when I'm saying that, I'm really talking about the spot silver and the spot gold market. This is how they've trained us, though, because who refers to that as spot gold or spot silver? They refer to it as gold and silver, but that reflects a trading market. So inside of that, I think that this year we'll somewhere in the vicinity of $50. When it breaks above that, then it's anybody's guess as to where the markets will go. It's still way below its true value. And for spot gold, I could see it easily 3,500, maybe even 4,000, because the unknown into a new presidential term and lots of changes, and all of the corporations that are coming in, big corporations like Elon Musk's and Meta and things like that. And that's going to have a huge influence with deregulation, which we're already at leverage levels higher than we were in 2008. But let's add some more debt and more leverage on that. And what's happening with, the stress tests that were created after 2008, that was really more about making the public feel like the banks were safe and sound, not really a reality to whether or not banks are safe and sound. And so they're basically, the central banks, the Federal Reserve, is handing over all of the keys to the kingdom to the banks right now in an environment where the expectation is a whole lot less regulation. You want to talk about a casino? I look at it two ways. Number one, if it's for speculation, it's severely overvalued and that will come down. What you need to do is make sure that you own gold to hold your purchasing power so that you have something to work with on the other side of it. But to your point, everybody's got to have a roof over their head. And it isn't just housing to buy a house, it's also rents that are going up at an insane level, right? So part of the strategy is the ability to repay that debt with dollars that have no value, or fiat currency that has no value, which is exactly the same strategy that the government utilizes. It's always repaying the debt with dollars that have less and less and less value. So based upon your mortgage, you want a fixed rate mortgage, right? And I know in parts of the world, you can't, like in the US, you can get a 30-year fixed rate mortgage. You can't always do that in different parts of the world. But if you get a fixed rate mortgage, there is a calculation that we can use to determine, well, how much gold do I need to pay off that mortgage? Because we know what the true fundamental value is. You can't count on Wall Street to do that. But the central banks will do that to get confidence back when they do those overnight revaluations, right? So let's just make life easy and say, okay, right now it might take 10 ounces of gold to pay off that mortgage. Well, by the time that happens, it might take a quarter of an ounce to pay off that mortgage. So you've got to have a place to make your last stand. And as long as you can qualify, which is a big problem for a lot of people, right? But as long as you have the ability to take out a mortgage, you buy enough gold so that you can always, boom, pay that mortgage off just like that. Now, historically, 25 ounces of gold buys an entire city block, buildings and all. And that's why I say, like in Venezuela, I think it went up overnight 3,500% when they did that overnight revaluation. Then you just sell the amount of gold you need, you pay off that mortgage, boom, you're done.